first and foremost, we are also still in a COVID second wave, which has now been lifted as far as the level 3 is concerned yesterday. But we will anticipate as a baseline, we will get another third wave in the winter of this year. But also as a baseline, we only expect widespread vaccinations to only start in the second half of 2022. The Economist also have, the Economist, the magazine, also have the same view. Other reporters such as the Washington Post, New York Times also have a similar view that we are likely to only see widespread vaccinations in the second half of 2022, which means we are going to have at least another 2 sets of waves as far as COVID-19 infections are concerned, winter this year and then summer later, which is going to come with disruptions should the health industry get overburdened by hospitalization. It will necessitate a return of some level of level 3, which is going to again impact negatively on the hospitality sector, the tourism sector, which should be the job creators. So this is just to show where we are in terms of the COVID cases nationally and provincially. In terms of the death rates, we can also see they've also peaked and starting to come down. The biggest province as far as the economic contribution are concerned are the ones that are impacted quite drastically in GP, which is Gauteng, KwaZulu-Natal and Western Cape, and to a lesser extent Eastern Cape, given that from an economic point of view, it's a smaller contributor to total economic growth. In terms of herd immunity, as I said earlier, it's all dependent on how fast we get vaccination going. But suffice to say, lockdown restrictions, though it's necessary to reduce transmission, a debatable point, but it is what all other countries are doing, which means there is some evidence to support that. But it has economic costs for businesses, and for this year we still expect liquidations for small medium enterprises to continue to rise. In part, we haven't seen them rise quite drastically last year because court processes have been delayed, and we're starting to see those coming through. Job losses, we still expect them to continue to rise, given that many companies have rejigged their operations and are not going to re-employ the people that they have let go in 2020. Remember, in 2020, up to Q3, about 1.725 million jobs were lost, and we expect that to continue this year. And as a result of the lockdown restrictions, as basic principles, government as regulations that leads to devastation in the economy, it is also a government's responsibility to make sure that they cushion those that are impacted negatively. So as an expectations in the upcoming budget, we expect the temporary employer-employee relief scheme to be extended by a further couple of months. The credit guarantee scheme, which had a poor take-up, is also being relooked to ensure that it reaches the larger majority of SMEs and small medium enterprises that it was created for, to actually access that credit. And another debate that is being done at national level, the basic income grant, though it is necessary given the times, there is a risk to make it permanent, which means it's going to be a permanent risk to the fiscus, particularly in an environment where economic growth continues to remain quite low without generating enough tax revenues to support that. So that is one of the risks as far as the fiscus is concerned. And you would know from National Treasury's MTBPS last year, they did say around 2023, 2024, if we don't do something drastic in terms of cutting spending, we are likely to go into a fiscal crisis. And that risk is pretty much quite alive. And it may come sooner rather than later should global financial conditions turn away from emerging markets. So it is still about cushioning the economy that is unavoidable, and it has fiscal costs. which will need to be paid in future. So we will have to expect expenditure cuts. Treasury has penciled in some 300 billion rand over the next 3 years in the budget. We believe that is too drastic, and the President's Economic Advisory Council also in their report also thinks they are too drastic, which means they have been trying to push Treasury to relax those expenditure cuts or to extend them over a longer period. Tax hikes in future will have to happen in order to fund or to make our deficit, our debt to GDP more sustainable, or we have to actually implement economic reforms that lead to faster economic growth that will generate the tax revenue. So these are unavoidable. They will have to happen. So fiscal consolidation is going to take place for much of this decade. Tax hikes will have to come in one form or another. Treasury has penciled in the MTPS about 40 billion over the next 3 years, largely focusing on high income earners. But that in itself is not the solution to our debt problems. There is a lot of research globally that shows clearly that fiscal consolidation is not achieved through tax hikes. It is achieved through expenditure cuts, which means Treasury's position, though it is correct in terms of aggressive expenditure cuts, it also have risk over the short term in terms of stifling economic growth. In terms of monetary policy, our expectations is we are not going to see any hike in interest rate until the second half of 2022. The SARB in their last monetary policy committee, they have penciled in their quarterly projection model, which they say is just a broad guide. It's not necessarily what the SARB is going to do. They've penciled about 275 basis points hikes by 2023 cumulatively. So what we would have to make is a basic assumption that says vaccinations will only start in the second half of 2022. Sorry, that's 2022, and herd immunity reach sometime in 2023. The economy will only return to full capacity only once the herd immunity is achieved. So until then, we'll have stop-starts in the economy. And other questions that also come is who to vaccinate first. As the health department have said, frontline workers. But the problem is workers that work on a day-to-day basis in industry are the ones that will continue to move, and they will be moving the virus. So we'll still have the problem as far as the broader economy is concerned. It's not going to solve much of what is required to fully open the economy. So we can only expect the economy to become fully open once herd immunity is reached, which we expect sometime in 2023 and beyond, which is a long time where we would expect stop-start in the economy. So a basic macro focus for SA, real growth, we expect it to about 3.5%, which is roughly in line with the consensus, moderating to 2% in 2022. Inflation, we also, like the emerging markets broadly, we don't have an inflation problem. 3.8% expectations for this year, rising to 4% in 2022. The SARB has about 4% this year, rising to about 4.5% in 2023 and about 4.6% thereafter. So roughly in line. The unemployment rate, we expect it to increase this year before it starts to moderate next year. And as I said earlier, expectation for interest rates unchanged this year with a 25 basis point in 2022, which means we still are not going to see a policy normalization as far as interest rates are concerned. So that is what we expect as far as the macroeconomy is concerned. Some of the long-term global themes and also that impact on SA is that localization of global manufacturing at consumption sites is going to be what we are going to see. And this is going to also result in changing dynamics in the commercial property space as far as warehousing is concerned. Shorter inventory cycles, that is going to reduce the need for warehousing, is going to negatively impact that part of the property market. If we also look in terms of the technological leap that we have seen, is likely to be permanent. Huge benefits for economies, but the digital divide is going to continue. As far as SA is concerned, we're still grappling to roll out spectrum, which means the cost of communication continues to be quite high, but much more globally, we will see continued rollout of data center infrastructure, off the grid electricity, data security cooling system. That are some of the niche investment themes that we may see over the next decade. The rise of home office and online retail markets also going to change the dynamic of property market, where over time residential property market may likely to improve at the cost of commercial property. But locally, I think some of my colleagues are going to touch on this. From a valuation point of view, property is one of those sectors that looks quite cheap, which means it has good potential over the medium to long term. Tourism sector is here to stay, so we shouldn't write it off because of the lockdown restrictions that we have currently. But if we just look in the broader African continent, one of the themes that is quite important is to follow through with the Africa Free Continental Trade Area, which still has a lot of hurdles to cross, particularly if we consider that we don't have road infrastructure that is efficient enough to accommodate transportation of goods. But also it needs an accompanying Africa-wide air transport protocol that is going to open the skies, which is where we come to the infrastructure spend that is required in SA and in the broader continent, or even globally. We have seen a lot of fiscal stimulus being focused towards infrastructure spending, roads, rail, communication networks, and energy, which is going to drive much of economic growth. But for SA, the economic reforms that are required are still quite slow in being implemented, such that we should expect much slower economic growth beyond this year, when the best effects of the contraction in last year are out of the numbers. So we shouldn't really look up to much higher growth beyond 2021 because the economic reforms are quite slow. Much of the problems are not with the economic policies themselves, but they lie within the political economy, which for some reason government has been quite slow to implement those economic reforms. Data, for instance, is one of those easy ones which government should have implemented. The virus hits within a couple of weeks, ICASA released spectrum, but for something that we need much more urgently for the broader country in a sustained basis, we haven't actually auctioned it.